Gene Munster of Loop Ventures. Gene, good to see you.
Hi, Melissa.
Paid sub growth. That was what you pinpointed. You nitpicked for this quarter.
Nitpicked. I think you really need to think about the business and the stock. The business is doing really well. Paid sub adds up 9%. The guidance was for 9%. Even with that guide down, it still was 9%. This is off some incredibly difficult comps. And so I think give them credit. Also, engagement up 17% year over year from the pre-pandemic levels. What that tells me, Melissa, is that more people have gotten essentially hooked on Netflix. It is a testimony of their great content. And I want to kind of stop that thought on business and switch to what I think is an important topic that Julia brought up in terms of the stock and the growth piece to this. Ultimately, that is a question for any tech company. How are you going to continue to grow? Netflix needs to answer that in a more profound way because they trade at about a 2 times multiple relative to the rest of FANG. And I have some questions about this gaming opportunity. When Julia was talking about that and reading the quotes, it sounds really good. But ultimately, for, I think, gaming to be successful, Netflix needs to answer a question about their identity. And ultimately, video, to me, is different than gaming. They put it both in the content category. And I would ask this question, is if you look at companies like Electronic Arts and Take-Two, are they going to be producing movies? And the answer is probably not.
Do you have any sense that Netflix would have to spend money on gaming content, or that they partnership with a developer of games? I mean, how does this get is this just another thing for Netflix to spend money on?
Unclear about what the initial approach is going to be. They're doing the interview right now, and we'll see, I'm sure, some commentary about that. I've asked myself the same question. The comments that they have leave that open-ended, if they're going to come out with their original gaming content or that they will license gaming from other players. I think that Netflix, what they've done exceptionally well is to do original content. So my guess is they may start with a catalog of video games similar to what they did in video with streaming, and may evolve that into their original gaming content. And if they talk about a 10-year investment phase, it probably is around that, building original content, original gaming content.
Bottom line, Gene, the business is great, but it may not actually deserve a growth multiple at this stage in the game.
Exactly. Effectively, nothing's changed. Stock's up 8% in the past year. Point of reference, Apple's up 50%. I think that speaks to the investors and how they think about the long-term growth rate. We're all going to continue to enjoy Netflix. However, I don't think that investors will benefit appropriately.
All right, Gene, good to speak with you. Thank you.
Thank you.
Gene Munster, Loop Ventures. Dan Nathan, do you agree with Gene? What, I mean, do you think gaming could be it? Could be the growth vehicle for Netflix?
I think it really comes down to how much they have to spend to do it. Obviously, the stock had, there was a lot of fits and starts over the last 10 years when they started doing original content, and the amount I think they were spending is upwards of 15, 16, 17 billion dollars. So Julia just said they're going to spend 8 billion on original content this year. I don't know how you could build out a gaming platform and not do it, or make other acquisitions the way Amazon has with Twitch and that sort of thing. So I would suspect they make some acquisitions. But here's a good idea. Netflix is literally like the original, the OG meme stock of the last 10 years. Why don't they just go out and buy GameStop and buy AMC, and then they got the movies and they got the GameStop thing covered, man? I mean, come on, right?
That's genius. That would be quite a story.
Call me. Yeah.
Guy Adami, what do you think of? I'll break it down to this guy, and Gene had brought it up. Apple's up 50% versus Netflix's 8% gain in the year. So would you rather at this point?
What, would you rather Apple or Netflix?
Yes.
Wow. You know what? I'd have to. Just on the back of that performance, I know you think I'm going to say Netflix. I'm not. I think you got to stay with Apple here. That's proven itself, and the quarter's probably going to be ridiculous. Tim has pointed out correctly, by the way, that Netflix has basically gone nowhere since this time. Actually, before this time, it was sort of the spring of last year. It's been in this 485. 550 range, and we're smack in the middle of it. I will say one thing. Never bet against Reed Hastings, number one. So if he's getting into gaming, he's doing it for the right reasons, and he sees opportunity. And number two, this quarter, if you look at underneath the hood, there's a lot of things you could sell Netflix on this quarter on the back of, and they're not, which is a bit of a tell. Needs to get above that previous all-time high. Hasn't been able to do it for a while, but this is actually a pretty good sign, in my opinion, for Netflix.
Shepard Smith here. Thanks for watching CNBC on YouTube.